and see me. So thank you for having me. I must start with an apology. I am in Singapore 3 or 4 times a year, last time for the Temasek anniversary just in September, but I was unable to join you today, and I would have wanted to, in particular, since the launch of the Global Financial and Technology Network took place yesterday. Ravi did a splendid job in doing that, so let me apologize for not being there. What you asked me to talk about was how to, from a more mature banker view, build a fintech business that can achieve both scale and sustainability amidst very fast-moving global conditions. We just heard that on the panel. So I think, and for the benefit, I will talk about 5 principles that I think are important. In my view, one of the things I do with fintechs is I'm an early stage investor and the chairman of the advisory board of a Germany-based fintech called Raisin. And I will use some of the examples when I talk about these principles that come from Raisin and how we build a business at that fintech. So, from a 30,000 feet perspective, I think building a fintech business that achieves scale, profitability, and sustainability, in my view, needs 3 key ingredients. And the first one is really you need to be having a very clear strategy. And that strategy needs to address 3 conditions that are often faced when you're building a business. First one, rapid technology change. So in a way, you got to be at the forefront of technology when you start, because technology will take off, even if you're building your business, because you lock in that technology when you start. So you need agility to transform that as technology changes. Also, as we just heard in the panel, and I fully agree, if you're a fintech, the first part of your name is finance, and finance is a heavily regulated, scrutinized business. I used to be a regulator myself, and I think one of the benefits I could bring to the 10 years where I led UBS was understanding where the regulators were going in an environment where regulation changed fast with the introduction of Basel III, AML, KYC scrutiny. And I think it's very important to have that regulatory mindset and to not try and avoid regulation, but get there before your competitors. And I think that's an important part why regulation is important. And third, there are massively shifting consumer expectations and preferences. Security, it was mentioned in the last panel, is top of mind. Transparency and sustainability are aspects that consumers want. So you need to address these issues when you want to build a model. And Raisin is a leading platform for savings products and investment products, which are being added at around $80 billion of client money entrusted in it. We grew in 2023 by 70%. We are year to date at a 50% year-on-year growth, and having been founded in 2012, what we try and do is we're trying to transform the deposit-taking business in the EU, in the UK, and in the US. So we have a global business with a single platform operating in the 3 major jurisdictions that we started to work in: EU, UK, and US. This gives consumers much better interest rates and a one-stop shopping to diversify their saving deposits, whilst providing deposit-taking banks, who are our partners, with retail deposit funding and diversified for sources of funding as opposed to just market funding in areas and regions where they don't have a retail operation. So we're trying to match the experience to be a positive one, both for the consumers and for our partners. The fintech business that we build needs to also scale at every moment in time, reach to really balance scalability and sustainability. This is very important for all of our 600 partners, and it's very important to all of the clients we have on the platform. And we do that by leveraging technology, by fostering strategic partnerships, by prioritizing ESG factors, and by maintaining a really consumer-centric approach. And when I talk about the 5 principles that we want to adhere to, let me briefly give you them as sort of headlines and then say a few words to each one of them. So first, I think when you start as a fintech, you need to define a unique value proposition and market position that you can take. The bank that I helped run for 10 years, UBS, has a unique value proposition. It's the largest global wealth manager, and in Asia Pacific, in particular, after having taken over Credit Suisse, it is the key leader in that business. For us at Raisin, a unique market position is also important, and I'll talk you briefly about what that is. Second, unlike traditional banks, we need to, as fintechs, leverage technology for scalability and for user experience. That is the major advantage we have over traditional bank, fast-moving, scalable business based on technology and on a positive user experience. And we heard a bit of that in the last panel as well. Third, when you are in that starting period, you need to develop a resilient, data-driven risk management framework. It's all about risk and risk management. And I think you need to manage both counterparty risk on the consumer side and on the client side, but also on the partner side. And that is important. You're in the full framework of AML, KYC for private clients and for institutional clients. Furthermore, you need to implement a sustainable finance strategy because your clients want it. It's important for a scalable business, because one of the major reasons why many established banks have long-term, increasing costs is because the business hasn't been built on a sustainable platform and it needs to be transformed. And that transformation by moving from one to the other is a costly investment, and it also requires a switching off of redundant systems, which again, fintechs, starting without it, can really manage much better. Finally, you need to deliver growth, and growth needs to be best-in-class consumer experience. We just heard that also on the last panel, that some of the disruptors that move into the market actually change the behavior of incumbents by the way they do business, and for them it's a unique and profitable business position, and others need to adjust to that. So let me be very briefly, because I only got a limited time, talk about some of the factors. So unique value proposition. Well, you have to stand out in a competitive landscape by focusing on specialized offerings and by adding unique value to consumers. At Raisin, we achieved that by creating a value proposition that addresses a particular consumer pain point, which basically delivers tangible benefits to the consumers on our platform. And that is, we give them better rates for high yield saving products. At the same time, we are in the business of insured deposits. So this is a low risk product. And what we're trying to maximize for clients is a low risk, higher yielding product than they would get with some of the incumbent banks in which they are business. Second, as I said, our cross-border business really gives clients an international access. By expanding the partnerships with international banks, we can offer on a single platform in 3 major jurisdictions access to products that are of interest to our clients, and that has helped us. And finally, we are actually seeing that we do tailor our business to underserved segments of the markets, in particular senior or younger investors. Very simplified, jargon-free financial education added, because these products are something that has a very specific insured deposit framework behind it. Now, when we talk about leveraging technology, which was the second point, we have built a single platform for all of our operations across the EU, the UK, and the US. Now, as a bank, when you work in these 3 markets, you have very different regulations when you operate in a business that is focused on retail clients. But when you are a technology platform with a single banking license or a partner bank in all of these jurisdictions fulfilling your banking needs for your client, you can actually leverage a global single platform based on a cloud-based native model. And so scalability, cost efficiency, and adaptability are absolutely given. Jurisdictions have different AML KYC procedures. So automation of operational efficiency requires that you basically use a lot of what we just heard about machine learning and AI in these onboarding processes, both for the institutional clients and our partners, but also for the retail clients and the consumers that are on the platform. And from the start, you need to prioritize a digital first design and technology move, because working across jurisdictions, you don't want to multiply the cost of your platforms. And furthermore, one of the things that I thought was very important for us and where we learn a lot is a data-driven risk management framework is absolutely important. We designed a platform and control around it in a way that you can actually digitally onboard, and that onboarding gives you a license to play in the entire banking market, for example, in the European Union. So what we offer is a almost, leading best-in-class digital onboarding service that actually can be used by others. And one thing that banks like us could do is actually offer to third parties onboarding as a service. We don't do that at the moment. We work with these partners with onboarded clients to invest with them, but I think the model could be brought much further. You need advanced cybersecurity protocols if you're in that business. You need state-of-the-art security practices because you're dealing with the life savings of clients. And it came up in the last panel. Clients entrust a lot of their money to their bank, or in this case, to us as a fintech, and we need absolute state-of-the-art multi-factor authorization, data encryption, proactive monitoring of sensitive financial data. You name it, clients need to feel that they are in good hands. And then you need dedicated compliance teams around the globe to help you implement that. I'll be shorter on the ESG strategy that we have. I think it's very clear that we are promoting financial literacy. We're helping access financial investments to people that have been unbanked or that took a single or two products, but not a more sophisticated range of products. We focus on ESG products, so there's a product dimension when we talk about ESG, and we focus on our own ESG footprint and ESG reporting. I could go into the depths of that, but that's pretty much what everyone is now trying to achieve. We're just trying to do it in a digital, more platform-driven way. And then finally, let me end by saying what you need to do when you're in a fintech world is you need to deliver growth. Most of us are in a business where we need to grow a best-in-class consumer practice and a partner experience that makes us the partner of choice. We try and achieve that by basically very flexible integration solution for traditional banks, including white labeling our business model into their operations. We have strategic partnerships, as I said, embedded finance in other industries where we try and help the banks that work with us get to the forefront of where they need to be. And then finally, you need data-driven consumer insight, because it was said before, by looking at what our clients on our platform doing, and if we see a particular product or a particular value proposition attract a lot of interest, we need to adjust our advertising and our platform to deal with that. So lots of things to do. As somebody who's more used to traditional banking, I'm learning interesting things every day. I work with younger teams. The board around me at UBS used to be on average 65 or 60 to 65. Now I'm at 67, the oldest person in this fintech by far, but it's an interesting experience, and I'm working with really very sophisticated and very motivated people. So it's been a great turn of my career to be able to now work with fintechs. It's an old saying that banks don't sleep well when they look at their business model being disintermediated by fintechs. Joining a fintech, I must tell you, I sleep much better now. Let me stop there.